So I'm going to push mute on me and let you take it.
Perfect. So we're recording. Thank you guys for hopping on today. So I'm just going to start this call with a disclaimer that I am not in any way certified in taxes. I do not know anything concrete. I have no certifications, just years of experience I love to count numbers. I love doing budgets. I love doing taxes, and I am just crazy for this kind of thing. So this is just my own experience and my own research that I am kind of teaching to you guys so that you're well prepared for your taxes each year as a Beachbody coach. So we're going to go ahead here and share screen so you guys can see what I've got for you. Here we go. All right. So financial planning and tax tips for coaching by me. By the end of this call, I want you to have a clear picture of how to manage your taxes and set aside income. We're going to go over what is 1099 income, how coaches are taxed, what can we claim as deductions, how to track and manage your deductions, and setting aside a savings plan along with a tax cushion. So 1099 income, basically we're just independent workers for Beachbody. We're like their consultants. They cut us a check and the rest of the nitty-gritty is completely on us to manage and be responsible taxpayers. Nothing is taken from our checks to account for our duties to the government, but this is what gives us the flexibility as business owners to adjust our income appropriately and allow for tax deductions based on our own personal costs to run our business. How coaches are taxed is at the end of the year, any coach who made $600 or more is sent a 1099 miscellaneous from Beachbody, and the rest is up to us. A basic overview of tax brackets. So these are important for us to understand what we should anticipate saving, because this is where we're going to get taxed on our money. There's different percentages, and these matter in what we save. So what's a tax bracket and how does it work? Based on your annual income, for coaches, this may be our Beachbody income, plus, I should have checked this for typos, plus your day job income, plus your husband's income, or any of the above combined or alone. So again, just depends how you're filing your taxes. If you're married or not, if you have two jobs or this is it, and if you're filing separate or joint, if you are married, these are all things that you can do. So knowing where you fall in these brackets is crucial in the planning of our income and to withhold for our taxes. So we have to know your bracket to know when we need to adjust our plan. How do we figure this out? You can use your taxes from 2014 to kind of see what your taxable income was the year before. Your current 10 W-2s from 2015 and your 1099 miscellaneous that we would have just received or should be in the mail for you soon if you haven't already gotten yours from Beachbody. To take a glimpse of where you fall before deduction. So if you're looking at W-2s, you're looking at 1099s. That's your gross income. So you can plan for your gross income, but that's going to set the maximum aside. If you plan based on your taxable income, it's going to be a little bit smaller. So these are two different strategies you can take. I personally go for the safer, because the worst case is that I have extra padding. If I save more than I know I'm going to need to, then all I'm going to do is save for myself at the end of the year. I'm going to teach you to plan for the biggest possible taxes. That way you are safe and hopefully will not be paying more than you have saved by the end of the year. So here were the tax brackets from 2015. These change every year. This was something I had to do a little research on myself. I wasn't really sure how it worked. I knew they existed. So you can see it's individual, married filing joint, and married filing separate are just the ones that I pulled. There are other types, so if you fall into those, you can find those, you can let me know, we can talk about it. But these are the basic ones I think most of us Beachbody coaches fall under. So what we're looking at is that percentage as well as what our income is. So if you're looking at, say, individual, and you have a job and you have Beachbody income as well, you want to kind of see what that number is going to be total, because that's the bracket we're looking at. And so you want to look at what your total income you think is going to be or was for last year and go to that bracket. A little tip with this I didn't know before today. I looked this up and thought it was really cool. Typically for myself, I think my husband and I usually fall in that 25% bracket. And just by always being in a job that worked with tips and flexible income and saving for safety, I always saw my paychecks that about 25% of my gross income was what actually came home. Now, when I worked a standard job, that was also that I took out for some kind of insurance. Maybe I had AFLAC. Maybe I took out for my 401k. So there were other things coming out, but pretty much I noticed that whatever I was supposed to get paid and then what I actually got paid was about 25% less. So that's what I started to just use as my goal of savings for my tax bracket. So 25% is kind of a good, if you don't know, at least go for that. If you do know, then go for your bracket. So what I learned today is that it rolls. So if you make, we're looking at this married filing jointly, let's look at the 25%. So if you and your husband together gross somewhere between $74,901 and $151,200, you're in that bracket. You're not getting taxed 25% on all of that. If you read this, it's the first $1,800, you're getting taxed 10%. Then the next, you're getting taxed 15%, and then the next 25%. So that's cool. You're saving on taxes. I didn't realize this was a thing, that up until you make $1,800 or $18,000, you only need to save 10%. Up until you make $75,000, you only need to save another 15%. So that's where it's important for you to know the bracket and what income percentage it changes, and to keep in mind the whole picture. So if you're filing with your husband, you have multiple jobs, you want to kind of keep a rolling tally of when all together you're hitting these income things. You could kind of do it backwards too. If you want to save less, then you could look at just specifically your Beachbody income and when does it grow to that and save more. But I would say a safer thing is to plan ahead and to account for that your husband's income or your second job income boosts you into a bracket. And when together as a couple, or you plus your other job both together have hit that next bracket, whatever month it is in the year, that's when you should up your savings. So right now, we should all be saving 10% of our Beachbody paychecks, putting that aside, assuming we're going to get taxed on it. Then in a few months, when we hit that next bracket of income, we want to save 15%, then 25%. And hopefully, millionaires, we need to save 35% someday, whatever it is. So you can roll and you can know your brackets and you can save 10 and then you can save 15 and then you can save. Or I've always just done from the get-go, 25% of my paycheck goes to taxes. And then that's safe because I did only get charged 10% on that first whatever I was making. And I just saved an extra 15% that's now savings. So it's saving for myself without even thinking twice. I just pretend it doesn't exist and I don't look at it till the end of the year because I can't touch it till I've done my taxes. Deductions. Yay, here comes the fun part. What are we allowed to claim as coaches to help offset our tax burden? Okay, maybe it's not as fun as it sounds, but it's really, really important that we know what we can claim because this is what's going to make our taxable income lower and we're not going to pay as much in taxes. You spend money to work your business and you don't want to overpay simply because you didn't write things off. Things we can deduct: business fees, Shakeology, Success Club trip deposit, your personal development, extra equipment you might need, travel expenses, mileage, home office, utilities, office supplies, coach gifts, meals out with prospects, parking fees, software and apps, advertising, postage, cleaning, and it goes on and on. Honestly, there are tons of things. I probably missed a bunch on this list, but this was just from my personal, what did I spend money on last year, that I kind of pulled ideas to get those going in your mind. It's just like any other business. Deductions legally by the IRS are classified as anything you need for your business that is deemed ordinary and necessary. So I'm sure if you've thought about taxes before or you did yours already this year, you've looked on the pages of Beachbody and there is some discrepancies on people claiming Shakeology or not. If you go to your tax prep guy, I think usually the people who use a tax prep guy are the ones who will tell you he said no. Well, I have to argue that. I don't think that's true. I think if you are hitting Success Club 5, if you are hitting Success Club 10, that is a necessary fee that you have to pay. You have to have home direct to be able to get commissions, to be able to get free leads, to be able to earn extra prizes. This is necessary, and it's ordinary that coaches have Shakeology and pay for it for themselves to run this business well. I think it's 100%. I claim it for myself. I think it's also completely ordinary and necessary that people run accounts for their husbands and pay for their shake as well, because he needs to be active and keep his status. So I also deduct his underneath mine. He's not making 600 in his yet, but hopefully this year that should completely change. But for the past years, I claimed his Shakeology under my business because it is a necessary thing that I had to do to build my business, was to pay for Shakeology under my husband. If you go to a tax prep, take that information to them, because if you're just saying, oh, it's just a product I buy and I use, then they're going to be like, no, you can't really, that's just personal use. That doesn't really count. Or things that you might use personal and business, like your internet. You're using it at your house, but you're using it for your business too. So things like that, you can say a percentage. So at least if you do go to a tax prep and they argue you that you can't use Shakeology, tell them, well, at least a percentage. Yes, I use this for personal use, but it is also for my business. I can't promote without it. I can't talk about it if I'm not using it. And get them to at least let you claim a percentage of it if they're really being a stickler. But that is one, if you explain well, there's no reason why we can't 100% say that that is ordinary and necessary in your coach business and something you can write off. So what can't you claim? If it doesn't fall within ordinary or necessary for business, you simply can't claim it. So some things that maybe I've personally made mistakes in the past or thought or have seen questions about, things like workout clothes. So workout clothes are tricky, and I actually did a little more research into clothing or uniforms specifically to try and find out what were really the laws. And if it's specific, if it's only usable for that thing, for an event, for a photo shoot, for a specific time, that's the only time you're going to wear it, use it, whatever, and then you're going to get rid of it, then you can say that that was an ordinary necessary fee and it's part of your uniforms or your clothing that you needed. That's not usually the case for us, so now I'm less likely to claim something like that. In the past, Brittany Liggett has even said if it was like she bought it for a photo shoot or she bought new clothes to go to Summit or to go on the cruise, then you could claim it. I see that to an extent, but I think with my further research, it's something I personally wouldn't be comfortable with because they're probably cute clothes I'm going to wear again. Now, if it's like we do a big event and it's a specific team branded shirt, and then you could say, I'm not going to wear that again, then something like that you might be able to claim. As well as if you are wearing clothes from Team Beachbody that have the brands that have our labels on them, those are marketing. That's clothing, but it's marketing for you. You wear those out and about. They're called wear and share for a reason, to promote conversations and questions about your business. So if it is the Team Beachbody stuff that's going to start a conversation for you, then yes, that type of clothing you can claim. Cool. So now that we know the basics, it's time to start tracking it. So I want to share with you this app I found this year called Everlance. That's what I have been using, and it's really helping me keep things sorted out. I do also still use pen and paper, and I should have grabbed it, but I also have every receipt saved. So you need to do that too, especially if you're going to a tax preparer, if you're not doing it yourself, or if you ever get audited, they need to see receipts. So things that you bought from Beachbody and it's all online, you don't necessarily, I don't know why I just did that. And it's not necessarily, I lost my train of thought. Oh, it's not necessarily like you have the receipt. It would be a good idea each time your Shakeology comes or whatever to save those receipts in there. I actually just had never thought of that. I was thinking we don't get receipts. But even like your business fees and things like that, you can print those off. You can show proof of that online. So that one, don't worry about as much. But if you go out to work at Starbucks for the day and you get a Starbucks, keep your receipt. That's a business deduction. You had to buy something at Starbucks so that you could work there for a couple of hours. If you meet someone out and you share a meal with them and you talk about Beachbody because they're a coach prospect or they're a challenger prospect, then keep that receipt, save it. If you travel to Summit, every single receipt, everywhere you go, everything you spend, as long as it was business related, like your food while you were there, your hotel while you were there, necessary things because you traveled. If you went and bought brand new cowboy boots while we're in Nashville, no, that doesn't count. But any other receipt while you're traveling, save all of those, and those all count. So Everlance is made actually for like Lyft and Uber drivers, but I think it really applies to any small business and to us, and that's what I've been using. It's a free app as well, which I really like. So this is kind of some screenshots of what it might look like, and this I actually updated last night to make sure that I was where I'm at. So when we talked about our tax bracket and our taxable income, you can see here that actually, even though I've made over $3,000 so far this year, I have so many deductions that I'm only taxed on $1,600. So if I really was like pinching pennies, say that I really needed to, like I quit my job, say that money was tight this month and I wasn't making enough, and I needed a way to like give myself some lenience in my business so I could pay my bills or my living expenses, then this is where I could say, okay, I saved 25% off the second I got paid, but really I only needed to save half of that. Really, I only needed to save 10% of anything that I've made so far. And then also I only need to save 10% of $1,600 so far to be safe for where I'm at with taxes right now. So these are things you can keep in mind. You can play with the numbers. You can do what works for you. But again, I recommend going bigger and saving more, because the worst that's going to happen is you're going to have extra at the end of the year versus owing on your taxes or being behind. So this is really simple. Your home screen looks like that. It has everything saved for you. And then that little plus in the middle bottom, you click on that and it lets you add in. This, because it was made for Uber drivers, that does have GPS. So I would say to turn that off, because it'll background refresh. It'll kill your phones even faster. And I know as Beachbody coaches, our phones already die in like 10 minutes because we're constantly on them. So turn that off. But if you do go, so we typically work from home. We could say our home is our office. You can deduct mileage. Forgot mileage on that list. So like if I go from here and I want to go to Starbucks and meet somebody and talk about coaching, which I did, that's why I have some miles on there. I went and talked to another coach at Starbucks. So that trip was a business trip. I can deduct that mileage. If I have to go drive to the airport to go to NLC, that's a trip, business mileage. If I am going to a gym to meet somebody and work out at the gym, that's business mileage. If I'm just going to Starbucks for myself to work there for the day, business mileage. I even think, I was thinking about this one today, I take my daughter now to my mom's for daycare so that I can come home and work. So that is mileage to go take her to daycare so that I can get my business done. So things like that. When you're going somewhere out of your house is considered your office. Anywhere you travel, you can deduct that mileage towards your costs as well. It's really simple as well. You put in any expense, revenue. So this third screen here is a pop-up of what the expense looks like. You type in how much it was, you put where it's from, you can put the date, and that's movable, so you can do it later. You can even do it ahead. Like as soon as I know next week's Beachbody paycheck, I put it in there. And then it doesn't count towards my total till it actually goes in, but it's already there and I don't have to think about it. And then your business line, you can put like Beachbody Coach. If you have other things, like my husband has 1099 income from coaching. So if I wanted to track his 1099 deductions on my phone as well, then I could put a second business line in there that says Nick's coaching and take care of his too. I made him get the app for himself so he could do that, but if I ever wanted to do it myself, I could. And then category, which I probably should have showed you guys this one with a little screenshot. Basically, once you pick your deduction, it has all of the things that it could be. So if you're looking at these categories and it's not really falling into there, that's also a good indicator that maybe it's not really something you can deduct. Personally, I think this year and last year on my taxes, I did that Shakeology went under dues, that's part of like my business service fee. And so same thing in Everlance, when I put in Shakeology, that's the one maybe tricky one, you won't know where to put it. And I put that in as my service fees or dues. And then at a glance, it shows you end of the year, your taxes. So if you click that little tax thing down at the bottom, it gives you just a nice picture altogether because your mileage isn't on that first one. So it shows you with your mileage included what is really your taxable income. So it's even less because I had some miles, and there's probably some more trips I should put in there too. Cool. Whoa, a lot of my money is going to taxes. So how do I save a little extra on top of this too? It's simple. You can choose the bracket above, like I keep talking about, and or above your taxable income. and the difference is your savings. So starting with 25% off the top from the get-go is already going to save you 15% extra at the very beginning. Or after you take away from your taxes, you can decide another percentage to save from the balance and also transfer to savings to maximize your savings and live off the littlest amount. So once you've taken away what you need for taxes, then you look at what's left and you can say, okay, now I'm going to put 5% of that into savings. So it's a little bit less instead of taking 25% off the top and 5% off the top or 10% off the top. And before you know it, half of your income is gone because you're trying to save and you're trying to set aside for taxes. I recommend after you take away what you really have, then take a percentage aside for extra savings if you want it. And of course, please remember that I'm not a tax professional, but simply a lover of number and rules. Take this, learn from it, and of course, see a professional if something doesn't work for you. Awesome. So do we have any tax questions?
That was awesome, Lindsay. Thank you.
Thanks.
That was super, super helpful.
Good.
I was like, see, over here, look at this. Look at the app. That app looks so good. I know you told me about it, but I hadn't just laying it out a little bit.
Yeah.
Helps.
Yeah, the app is a lifesaver because it keeps me on my toes with things and things that are happening in person. So even though I wrote things down and even though I have my credit card, which I should have mentioned too, I have one specific credit card that I use for Beachbody. So even if I have the cash, I put it on my credit card so that I have a paper statement of everything that I'm spending on my business, and it's all in the same place. And then I can use those records as another, here, if I lost a receipt, no, I paid for this, and this is what I paid, kind of thing. The other thing is just I have an envelope with all of my receipts, all of them, and it's just a big envelope. Everyone gets those free bags from Bath & Body Works or Victoria's Secret, and they're big and whatever, compact makeup bags. So it's just one of those, and I just shove everything in there. And when I went traveling, I didn't worry about it while we were traveling. I just threw every receipt in there, and then when I came home, I checked it out, took pictures of every single receipt. That way, again, receipts kind of rub, and sometimes you can't read them after a little bit of time. So when they're fresh, I have a good picture of exactly what the receipt is and proof of what I did. But I do that with the app, I do the paper, and I have the receipts still in hand. So I have the checks and balances system too of anything I might have forgotten. Or even Starbucks, sometimes I have gift cards on my phone and I use that to pay through the Starbucks app. So I screenshot my transaction, or I think Starbucks will email you receipts. But Starbucks, I didn't have on my credit cards. And so when I was double checking everything with my credit cards, there were a few more things I could have still done because I put them maybe not in my usual place of a credit card. So really checking for every little penny that you can save on taxes, because these are things that we spend on our business and we deserve to not pay twice, basically.
Your extra card account that you said you have for Beachbody, is that just an extra personal checking account that you open?
It's just a credit card through the bank. It's a Chase card, and then I picked that it's my one that has Amazon rewards, since we use Amazon a lot as coaches. So any business expense I'm doing, I'm also getting money back to spend on coach gifts and different things like that as well.
Okay, so it's not from your checking account?
No, it's not a debit card. It's a credit.
Okay.
It could be. You could have a separate debit, but sometimes there's things like a $300 cruise down deposit, or $500 for your hotel at Summit. And so those are just bigger things I would need a credit card anyways. So for me, it just made more sense to always be a credit card that I put it on and take it off.
Kelly, something we do, I like what Lindsay's saying. My sister does that too with Amazon card. But if you do have a separate checking account where all your income goes in there, and to train yourself, because at some point you're going to want to open a LLC or an S Corp. And when you do that, you pay yourself a paycheck. So we have our money that goes into a separate checking account. Right now it's just a personal one. We need to open up a new business. Control that flow of money so it's not oops, I just spent it. And then you can save more, what Lindsay's saying. You can take that 25%, put that in an account, transfer it to your personal, the rest to your personal.
And you're also, you're intentionally, like, you have money that you're going to spend on your business that way too.
And you have leftover money. Like we pay ourselves 67% of our paycheck.
63.
63. 63%.
Are we supposed to be doing 67?
So we just pay that. Oh, my income's going up. I could hire help now, or I could get that app, or I should pay for Teamsy now. So I don't know, kind of, it can work, but I like what you said about the credit card. I might do that just for the points, honestly.
Right. If you're spending on your business anyways, and like your Shakeology has to be on a credit card, which could be debit too, but it's just like a way to help me. And then I've always got this little bank there too to spend on my coaches, which is nice.
That is nice. I like that.
All right. I'm going to stop the recording and then we can still ask questions. But as far as people watching, I think this would be good.